In this section, I look at the anatomy of the yield curve. I am Ted Lem and a realtor with eXp. To explain this, we look at an actual yield curve from 2017 which slopes upward. It is important to understand how banks work. Banks borrow money at short-term rates and lend out at long-term rates. There are premiums added to it. The point is that when the yield curve slopes upward, they make money and banks will lend money out. To demonstrate what was happening over the past few years, I flipped through different dates to see what the yield curve looked like. These are Canadian yield curves. Even when rates were low, banks were able to make a profit from the net interest margin because long-term interests were higher than short-term interest. The economy was already weak and rates were kept low. This was around the time when COVID started in other parts of the world. Rates were dropped almost to zero due to fear of the economy collapsing because of COVID. Watch the curve shift lower. The Bank of Canada has more influence on the short end of the curve. By lowering rates, it changes the shape of the curve with time. The yield curve eventually slopes upward. Banks now can make money. They start to lend money, and that eventually enters the real estate market. The peak was around 2022 February or March. The Bank of Canada increased rates and the curve shifts. Eventually, the long term become lower than the short term and we have an inversion. Banks become less likely to lend at this point. Given the size of the bank balance sheet, it is likely that the Bank of Canada will continue raising rates. There is not much of a choice. This was covered in another video. Do you expect interest rates to increase? Are you thinking of buying or selling real estate? I would like to know. Want to know more about what is happening with the market? Call me if you need help.